Well, it looks as though the snake is starting to eat itself by the tail. When we look at the November deficit numbers, they have risen sharply for two reasons. Number one, tax revenues have fallen, and at the same time, the amount the government is spending has jumped. To get into the numbers, the US budget deficit increased by $57 billion from last year. That is a record for the month of November. Things they spent more money on are things like education, healthcare, and specifically interest on the national debt. Now, one of the traps that governments usually get themselves into is they look at an economy and they say, hey, politically, it's going to be better for us if we can stimulate the economy in some way. And so they usually want to try and spend money on one thing or another, and that will cause some sort of a boom in that area. And then they can say, hey, look at all this good that we did. The problem with that is governments are usually already tapped out on their spending. So they've already collected everything in taxes. And so if they want to spend more, well, then it would probably be a political downer if they said, hey, give us some more money first, raise your taxes, and then we're going to spend it on this thing and try and point to it as a good thing. People would probably recognize that, hey, that's not a good trade. I'd just rather have less money taken out of my paycheck. And so in order to avoid this, what governments normally then do is they just borrow the difference. And since they're borrowing it, people don't feel the pain in their paychecks, but people then get to look at all of the good that this spending did. It's a politically expedient move because in the future, that debt is going to have to get repaid. Now, traditional economists, and by traditional, I just mean the last 100 years or so, all the idiots that are the descendants of Keynes, they would say, hey, look, this is a good trade-off because the government spends with borrowed money that causes some boom, causes some stimulus, the growth in the economy happens, and then later when it comes time to pay that debt back, well, there's been so much growth that there's a lot more tax revenue to draw from that ultimately it's a good trade-off. Now, there's a couple problems with this. Number one is inflation, because it's really many times not the economy that's actually growing, especially as a result of the government spending. It's just that prices of everything are going up. And the way you measure the economy is with GDP, which is basically just the aggregate of all the prices. And so if you can drive prices up by printing a bunch of money, it's going to look like economic growth, and you're going to get more tax revenues, when in reality, that's not going to do anything to the financial well-being of individuals and corporations. But the bigger problem comes with the temptation to do this over and over and over again, because as it looks in the short run like there are no consequences, governments get themselves into a downhill spiral where they have to continue to take out more debt to spend money, to drive prices up, to bring in more income. But as many economists have pointed out, that trade-off really starts to get difficult at around 90% debt to GDP. Real quick word from today's sponsor, iTrustCapital. iTrustCapital allows you to use your retirement account to invest in Bitcoin, gold, and silver. Many people, when they buy gold or silver or Bitcoin for the first time, they just go out and they make the purchase, whether it's from a gold dealer or buying Bitcoin from an exchange. Later on, whether it's a year or 2 years down the road when the price has gone up a lot, they go to sell it and realize they're hit with a capital gains tax. This leaves people with a sour taste in their mouth when investing in gold and silver and Bitcoin, because they're saying, hey, look, I know that inflation is eating away at my fiat currency, my dollars, but if I put my money in sound money, if I buy gold, if I buy silver, if I buy Bitcoin, I'm going to get hit with a tax on it anyway. And that's why it's so important to take advantage of retirement accounts when you are diversifying your assets. The problem is most brokerages, most retirement accounts do not allow you to invest in gold or silver or Bitcoin or any other cryptocurrencies. That is where iTrustCapital comes in. You can buy and sell Bitcoin, gold, silver inside of your IRA anytime. You can use this retirement account to make new contributions, or you can even use old retirement account money rolled over into an IRA with iTrustCapital. With everything going on right now in the crypto industry, many people are concerned about any exchange, any place that allows you to buy cryptocurrencies, about security and fraud. With iTrustCapital, they never take custody of your assets. There is no mingling of assets, and there is no way for iTrustCapital to access clients' money. It is securely stored in third-party institutional storage that is cold storage. And it's a regulated trust company so that it is a legal IRA. Like I said, they take security very seriously, which is why I use and recommend iTrustCapital to invest in gold, silver, and Bitcoin for your retirement account. And if you use my link in the description below, there's a special bonus waiting for you as well. So if we look at some numbers here, this is a chart of the current federal surplus or deficit since the early 1900s. And pretty much for a long time, we had a fairly balanced budget, at least compared to today's standards. But when we zoom in on what's been going on today, we have not had a budget surplus for many decades, except for just a few years here in the 99, 2000, and 2001. Other than that, we've been running a deficit pretty much the whole time, and it's been getting very bad over the last couple of years. Once you get to the point where the amount of debt the government has gets to about 90% of the total GDP, well, then it really doesn't have any positive effect to take on more debt because your debt service payments become so large that they basically start eating up all of the growth that you are going to get from the increased spending anyway. Meaning, if I increase my debt in order to try and increase my income as a government, well then I'm going to increase the amount of debt payments that I have to make. So even if I do cause prices to go up, and even if I do cause tax revenues to go up as a result of that additional spending, usually it's not enough to offset my increased cost from just servicing the debt. And that's exactly what we are starting to see take place here. As we see this trend, this is the total amount of income that the federal government gets from taxes. We can see this large trend towards the upside here. And especially in recent years, after 2020, their tax revenue started to explode. And in fact, in April of 2022, there was just that massive record. The federal government had never had any sort of income like that at all. And that was because 2021 growth and prices were so high from all the printing that happened in 2020. But if you'll notice, that trend has started to now flatline or maybe even reverse as we are seeing the tax receipts start to get lower. This is because you have one of two choices at a point like this. You have inflation start to take off. So you can either raise interest rates as a central bank and try and tamp down that inflation, but that's going to push prices down. Or if you don't want to push prices down, you can keep on printing the money and keep on seeing those tax receipts go up, but then you risk hyperinflating your currency away and losing all power you have with the currency. And so our central bank, the Federal Reserve, has started to raise interest rates and try and clamp down on inflation, which means there's less money to go around now, which means the government is getting less money in income. Now, this is a chart of the federal surplus or deficit, just like we took a look at earlier. However, this is broken down by month instead of just by year. So we can see that the deficit was huge during the beginning of 2020 because they borrowed a ton of money to spend a ton of money. But after that, we saw their surplus. They actually hit a surplus here in early 2022. And then since then, we've seen a reversal in this trend as economic hardship has started to set in. That means the government is getting less income, but they're still having to pay more in spending on things like their interest. Now, if we keep on going on this trajectory, at some point it is inevitable that the interest expenses alone will make up the largest portion of the federal government's budget. Now, at that point, what we're probably going to see is some sort of creative tool to try and just stop that. Because ultimately, at this stage in the game, it's really not debt anymore. At some point, all the debt is going to just get printed away. And so it's not like if you and I borrow money, eventually we get more income and then we pay that debt back. Instead, what the government does is they just keep on borrowing more and more to pay off that old debt. But if you get to the point where you can't afford to borrow anymore, well, then you turn to your central bank and you just say, hey, you central bank, why don't you buy all the debt? And so the Federal Reserve right now owns, $8 trillion on its balance sheet. A lot of that is US Treasury debt. That means the government owes money to the Federal Reserve. Now, they've got $30 trillion worth of debt, so it's not all the money that they owe to the Federal Reserve. A lot of it they owe to banks and other central banks around the world, and even individuals who own treasuries. But at some point, most of that debt will probably get swept into the Federal Reserve as people just wind up selling that debt because the US government will turn into a worse and worse creditor. At that point, we really shift into the new modern monetary theory paradigm where you just print money to pay for all the expenses. And even though on paper it'll look like debt, it really isn't debt anymore. It's all going to be monetized and owned by the Federal Reserve. But before we get to that point, we have to take a look at the reverse repo facility, which has been climbing back higher a little bit recently, just for the end of the year. There's about $2 trillion in here in cash that financial institutions are holding with the Federal Reserve in order to get their collateral needs met. At any point, if the open market rates on US Treasury debt get too high, then this money will start to leave the reverse repo facility, go out to the open market and buy US government debt. So at some point, it'll either happen, it might happen slowly, it might happen all at once if the Fed decides to just drop the rate on the reverse repo facility a lot all at once. But at some point, all of this $2 trillion will leave the reverse repo facility. It will turn into a loan to the United States government through the purchase of US government debt, whether short-term or long-term, and that will give a little bit extra runway for the government for borrowing. And so we won't see kind of the full monetization of the national debt happen immediately. We've got about $2 trillion to go here before the federal government runs into a problem with their deficits. But no matter what way we look at it, it is looking almost certain like this is a hole that the government has dug for themselves that they won't be able to get out of other than printing, and we all know the inflationary results of that. As always, really appreciate you guys. Thank you so much for watching. Have a great day.